Welcome to AGORACOM Talks, your weekly go-to source for the best small-cap headlines for over 65 million investors since 2007.
And today, well, this deep dive is really a rapid-fire look at some key financial and drilling results. We want to get you right up to speed instantly.
Okay, sounds good. What are the main themes we're hitting today?
We're tracking three big things. First, confirmation that majors are paying these massive premiums for assets that are, de-risked.
Right.
Second, we've got technical validation, specifically for clean mining methods.
Interesting.
And third, ESG leaders who are really showing true financial maturity, solid results.
Got it. Okay, let's unpack this. Started with that first theme, the big money in gold. We have major M&A news, Loncor Gold, that's LN on the ticker.
Yep, LN, acquired by Chengtun Mining. It's a landmark deal, 261 million Canadian dollars.
Wow. Okay, so $261 million Canadian. What's the per share look like?
So this wasn't just, an acquisition. It really confirms majors are willing to pay up in cash the deal. All cash, valued Loncor at $1.38 per share.
Okay, $1.38. How does that stack up against recent trading?
That's the key part. It represents a 33% premium over the 30-day average price.
33%. That's a substantial premium. It really tells you something about perceived value and maybe risk reduction.
Exactly. And Loncor's executive chairman, Arnold Kondrat, basically said that. His quote highlights how the deal crystallizes the inherent value we have built over 15 years and eliminates future dilution while mitigating commodity, political, and execution risks.
So it locks in the value, takes risk off the table for shareholders. Makes sense.
It absolutely does. And seeing that 33% premium in cash, well, it sets a pretty high bar, a valuation floor maybe, for similar juniors, right? The ones who de-risk their projects.
Good point. So speaking of de-risking through methods, let's shift from valuation to operational validation. ESGold, symbol ESAU.
ESAU, yeah. They reported positive results from testing tailings over in Colombia.
Right, tailings testing. And this connects to that clean mining theme you mentioned.
Precisely. The technical details here, they seem to confirm that low-impact model. Bench tests showed, well, pretty high grades, actually, averaging around 4.88 grams per ton gold.
4.88 gold, okay. And silver.
And a solid 35.7 grams per ton silver. Nice grades from tailings.
Definitely. But what about getting it out cleanly?
See, that's the real story here, I think. The recovery method. They hit gold recovery rates of roughly 52%. Now, 52% might sound, okay.
Yeah, not spectacular on its own, maybe.
But here's the thing. They achieved that using only simple gravity-based methods. No complex, costly processing, no toxic chemicals like cyanide.
Only gravity. Okay, that changes the picture significantly.
Yeah.
Lower cost, lower environmental footprint.
Dramatically lower capex, potentially, and much less environmental liability down the road.
Makes sense. And the CEO, Gordon Robb, commented on this.
He did. He noted these results, quote, provide clear validation of the strong potential economics that can be achieved through a simple, clean extraction process. It's basically validating those low-cost, low-impact goals.
Clear validation indeed. Okay, so from clean tech validation, let's pivot to companies really executing financially on those green mandates. Zefiro Methane, ZEFI.
ZEFI, yes, they just reported record first quarter results, and this is firmly in the ESG space, dealing with methane emissions.
Record results. How good are we talking?
Well, these weren't just slightly better results. They hit $12 million in quarterly revenue. That's 20% higher than any previous quarter for them.
Wow, 20% jump. That's significant growth. What about the bottom line?
That's where it gets even more interesting. They reported positive net income and critically positive free cash flow.
Positive free cash flow. Yeah, that's a really important metric for investors to note. It means they're generating cash beyond just covering costs.
Exactly. It signals real financial discipline, a kind of fundamental maturity, you could say. And you see it in action, too. They've got that active $1.3 million project with West Virginia's WVDEP.
The Environmental Protection Agency there.
Right. And they also just successfully delivered their first ever carbon credits to Mercuria, the big commodity trader.
So connecting the dots, environmental service, operational execution, and now clear financial payoff. It seems to be working.
It really does. And along those same lines, look at Waste Energy Corp, symbol WAST.
WAST. Okay, what's the headline there?
They're powering ahead. Just got their first feedstock delivery at their Midland facility. And that delivery, it triggers the commissioning of their waste conversion system.
Ah, so commissioning starts now. That's a major operational milestone. What's the potential for that facility?
The projections are pretty strong. It's designed for 90 tons per day capacity, the expectation. That should generate over $10 million in annual revenue.
$10 million annual from one facility. And margins?
Forecast gross margins are exceeding 50%.
Okay, 10 million revenue, over 50% gross margins. That's definitely attractive on paper. But yeah, commissioning new plants, especially waste to energy, can face hurdles, right? Delays, ramp-up issues.
Absolutely, that's a fair point.
So what should you, the listener, be tracking to see if they hit that timeline and those margins?
Yeah, good question. The key milestone now is achieving sustained throughput. We need to watch for that successful, reliable ramp-up of the waste conversion system. Hitting that design capacity consistently is really the only way they'll validate that forecast profitability.
Makes sense. Watch the throughput. Okay, finally, let's swing back to gold, but this time focusing on resource expansion. Tudor Gold, TUD, in the Golden Triangle.
TUD, right. Big news out of Treaty Creek. They announced they intersected high-grade gold, significantly expanding the known mineralized zone.
High-grade intercepts. What kind of numbers are we seeing?
Well, one hole in particular, GS25191, that yielded 1.70 grams per ton gold over a pretty wide 46 meters.
1.7 over 46 meters, that's solid. Anything richer within that?
Yes, and this is important. Within that wider zone, there was a higher grade interval. 4.12 grams per ton gold over almost 9 meters, 8.90 meters specifically.
Okay, 4.12 over nearly 9 meters. That's a nice high-grade kicker. What's the significance there, especially considering their existing huge resource?
Well, it supports the potential for a distinct high-grade underground mining operation. Remember, their Goldstorm deposit already has this massive indicated resource, over 21 million ounces.
Right, mostly lower-grade bulk tonnage style.
Exactly. So if they can consistently define these higher-grade zones within or adjacent to that, it could, seriously enhance the project's overall economics, adds a whole new layer of potential value.
De-risking the project further, potentially boosting overall grade. Interesting.
So let's try and tie this all together. What we've really seen today is the market aggressively rewarding clear execution, right?
It's like it. Value realization through acquisition, like Loncor.
Yep. Then the technical validation of sustainable mining with ESGold, and then significant financial growth directly linked to providing environmental services like with Zefiro and potentially soon Waste Energy Corp, and resource growth with Tudor.
Yeah, the pace of value creation seems pretty relentless across these different angles right now.
Which brings up, I think, a really interesting question for you to consider. We just saw that huge M&A premium paid for Loncor, right?
Right, the 33%.
And now we see these strong, high-grade technical results coming out of Tudor Gold at Treaty Creek. So the question is, how might confirming a distinct high-grade component there affect Tudor Gold's valuation, TUD, especially as they move towards their updated resource estimate?
Something definitely worth thinking about. Okay, use this knowledge, dig deeper into the companies that caught your interest. We'll talk to you next time on AGORACOM Talks.